The latest pulse of economic activity in New Zealand shows a cooling effect going on. Kiwibank's survey shows a firm slowing activity from last year when the country bounced back from lockdowns. Jared Kerr is Kiwibank's chief economist. He's with us. So, Jared, whereabouts is the cooling?
Look, it's widespread actually. We're seeing cooling across the economy. The North Island seems to be cooling a little faster than the South Island, but generally speaking, we've seen quite a slowdown in economic activity across the whole country. And we're putting that down to consumers being concerned about rising interest rates and higher inflation. We're seeing that coming through in retail spending starting to come off. The fact that the housing market is in retreat is also playing a part across the country. Some areas are slightly worse than others, but broadly speaking, we've got confidence issues and a housing market in retreat.
Was this expected?
It was. Yes, it was. You have a central bank fighting inflation, and when you fight inflation, you lift the cash rate, and they've lifted the cash rate quite quickly and sharply, and we've seen mortgage rates and business lending rates, almost double over the last year. When that happens, you're putting, significant pressure on households and businesses, and you're cooling the economy down by design.
Where's the most coldest place in New Zealand at the moment?
It's the bottom half of the North Island. We're all recording 3 out of 10, which is a little chilly, and it shows you that those areas are slowing down the most. We've seen their house prices come off the most. Auckland is part of that. Wellington seen some significant declines in house prices, and population growth has also been a bit of a concern for the regions.
Canterbury's bucking the trend, though.
Yeah, Canterbury is the most upbeat. And when we say most upbeat, it's 5 out of 10. So, a rather average result. Clearly, their housing market is performing better than other areas. It's a lovely place to live. They've got a bit more population growth than other areas. So holding up better than others, but, by itself, a 5 out of 10 is, it's a pass, but it's not a great result.
But is this growth just coming back down to realistic levels after pretty solid activity last year?
Yeah, I think that's a very good point. Before, in 2020, we had very cold outlook. There was a very scary period at the start of the pandemic. Then everything bounced back miraculously last year, and we saw, very heated readings. We had a housing market which was making unsustainable gains, and we saw quite a boost in confidence on the back of those gains, and some very large spending and large spending on large ticket items. Here we are reversing some of that exuberance of last year.
What's the outlook?
The outlook is mixed at best. We think we're going to grow below trend, which is an economist's way of saying we're growing, but certainly not as fast as we'd like to grow. We think interest rates, the fact that the housing market's in retreat, is going to cause quite a significant slowdown in household consumption. And we've seen business surveys turn south, which worries me. What worries me the most is the fact that investment intentions from businesses is in contractionary territory. That kills growth. So we are expecting quite a slowdown over the next year, but hopefully we reach a point next year where the central bank realizes that it's done enough, and the next moves will be rate cuts.
A slowdown into recessionary territory or not?
It's definitely a risk. It's not our forecast. It's definitely a risk. A lot of leading indicators globally are pointing to a recession. You look in the US, there's a lot of key indicators over there pointing to recession, including their interest rate curve, which is inverted. And we have an interest rate curve here, which is inverted. And what that means is, shorter end interest rates are higher than longer end interest rates, and it's a signal that there's a significant slowdown coming because of the excessive tightening in the short end. So there's a lot of signals out there that are flashing red for recession. we don't think that we get a recession. We think we get a significant slowdown in growth and a bit of a bumpy road into 2023.
Jared Kerr, thanks for joining us.
Pleasure. Thanks for having me.